In March 2019, an anonymous Bitcoin investor by the name of Plan B published something called the stock-to-flow model on Twitter. With less than 100 followers on Twitter, almost no one paid any attention to this man. But it didn't take long for people to notice the ingenuity of this investing strategy, and practically overnight, Plan B became one of the most popular Bitcoin analysts in the cryptoverse. What he didn't know at the time is that this would change his life forever.
Analyst Plan B and his
Here to
stock-to-flow
discuss
model.
this sorcery
The man,
today
myth, and legend.
is Plan B himself.
Plan B.
Featuring the second appearance from the great Plan B.
Plan B, welcome to the show.
Thanks, Jay. Thanks for having me.
In a world with assets whose prices change by the minute, it becomes increasingly difficult for investors to analyze the price trends for an asset like Bitcoin. While some of it is fueled by everyday developments or technical analysis, others are purely based on human psychology. And yet, until Plan B published the stock-to-flow model, no investor had a reliable way of tracking the price of Bitcoin. But Plan B followed a very simple idea. Since Bitcoin is a storer of value today and is treated like a commodity similar to gold and silver, why not use the same ratio used to forecast the price of gold and silver? And therein lies the brilliance of the idea. It's so simple that any investor with half a brain could have come up with it, and that's precisely why none of them did. The idea was shunned because it was too simple. Bitcoin is complex. It can't follow a simple stock-to-flow ratio, can it? The stock-to-flow model is nothing new. Plan B's contribution to the field of crypto has everything to do with how he took a pre-existing model and adapted it to Bitcoin.
Stock-to-flow ratio, I knew that from the commodities market, so it was not the first time I heard it.
Yep, of course.
Because gold investors use it.
Just like its name suggests, this ratio compares the stock and the flow of an asset. People have been using this to assess the price of commodities like gold and silver for decades, and no one thought of using it on crypto, and that's how the formula was adapted. Stock refers to all the available supply in the world of a given commodity. It can be the world supply of gold or silver or platinum or whatever you want. Flow, on the other hand, determines how much supply is created each year. So in the case of gold, it would be how much gold was mined in 2023 versus how much gold there is in the world. When you divide the stock of a commodity by its flow, you get the stock-to-flow ratio. Since Bitcoin's supply is already known, and we also know how much Bitcoin is mined every year, calculating the stock-to-flow ratio of Bitcoin becomes a very simple task. Other commodities are based on estimates of supply and yearly mining. Bitcoin, on the other hand, is the complete opposite. The total supply of Bitcoin is set at 21 million coins. Today, there are almost 19.2 million coins in circulation. With every validated transaction, new Bitcoins pop into existence. Because this follows a rigid schedule, if mining continues, the last Bitcoin should be mined no earlier than the year 2140. Today, every 10 minutes, a block of Bitcoin is mined. The reward for each is 6.25 Bitcoins. If we calculate the number of minutes in a year and divide it by 10, we can calculate the annual flow of Bitcoin. That number stands at 328,500 Bitcoins. With both stock and flow known, the ratio would equal 58.35. Now, the higher the ratio, the scarcer the commodity. Gold, for example, has a flow rate of 62.3, while silver has a stock-to-flow ratio of only 22. This number simply means that at the current rate of mining, it would take us 62.3 years to double the amount of gold in existence. But Bitcoin works differently. The supply of gold is unknown, while the supply of Bitcoin is known to everyone. Also, Bitcoin mining cannot increase in the future. That's because, unlike gold, the more Bitcoin we mine, the harder it becomes to mine Bitcoin. This is because the crypto commodity goes through something called a halving. Every 4 years, the number of Bitcoins mined in every block halves. So those 6.25 Bitcoins per block in 2020 will become 3.125 Bitcoins per block in 2024. And that number will keep dropping in the future. But this is a good thing. As the number of coins mined from each block is halved, the ratios will double. And remember what we said about the high ratios? If the ratio becomes higher, the commodity becomes scarcer and therefore more valuable. In other words, Bitcoin's price will rise. When Bitcoin traders and investors first heard about this model, they were skeptical. When they took a graph of the price of Bitcoin from its creation until 2019, when the stock was introduced, they found out the shocking truth. That gray line in the stock-to-flow price prediction. The colorful line is the actual price of Bitcoin throughout the years, and as you can see, there's a ladder-shaped pattern the model follows. The stock-to-flow model followed the price of Bitcoin almost perfectly. The only fluctuation it experienced was a spike in 2013, then 2015, and a pretty small spike in late 2021. Other than that, Bitcoin's price has been following this model perfectly. But something happened in 2022. The stock price fell below the predictions of the stock-to-flow ratio. We've been talking about the stock-to-flow model and how it predicts the value and consequently the price of Bitcoin. But we never talked about Plan B, the man behind the model. Quote, #Bitcoin price is tracking stock-to-flow model like clockwork. If BTC does follow its historical path, we will take out gold in 2021 to 2024 and real estate in 2024 to 2028. After real estate, we cannot interpolate anymore and have to extrapolate. Uncharted waters, hyper-Bitcoinization? End quote. This tweet is the reason Plan B is one of the most respected Bitcoin analysts in the world. But despite his fame, very little is known about Plan B. Besides his YouTube channel, where he has shared roughly 24 videos over 3 years, and his Twitter account with 1.9 million followers, no one knows the identity of Plan B. He's a man who likes to stay anonymous, much like the creator of Bitcoin. All we know is that he's from the Netherlands, judging from his Dutch accent in his personal videos and video interviews. According to Cointelegraph, Plan B studied law in college and then he focused on quantitative finance. Using his knowledge of traditional markets, he became an institutional investor at the start of his career. But that got boring quickly. So instead, he quit his regular job trading and managing formal assets in 2020 and shifted his entire focus onto Bitcoin. Today, he's considered by many as the most popular quantitative Bitcoin analyst after having spent countless years studying the price of this particular cryptocurrency. Plan B has also spent countless hours developing and perfecting his stock-to-flow model, and it's now considered one of the best to track the value and price of Bitcoin. In addition to this, he's also an investment manager, and his team handles billions of dollars in assets. While that might look intimidating now, Plan B had a humble beginning. Like we said at the start of the video, back in March of 2019, no one knew his name. He was a nobody in the space. However, as soon as he published the newest model, everyone started talking about this mysterious investor. In a matter of weeks, his follower count surpassed 1 million, and people started following the stock-to-flow model almost religiously. But then, 2020 happened. After receiving heat during the 2020 meltdown, when the price of Bitcoin tanked to almost $3,600, people started hating Plan B. They said his model was wrong, and they claimed there was no way Bitcoin's price would reach the price estimated by his model. But Plan B defended his model on Twitter with conviction, but people weren't buying it. Regardless, at the end of 2020, Bitcoin's price was at almost the exact same price point specified by Plan B in his stock-to-flow model. While a lot of investors have lost mountains of cash and many more criticize his model, he remains optimistic about the price of Bitcoin. Just like the spikes in 2013 and 2015, and even in November of 2021 when the price of Bitcoin reached a dizzying $69,000, this model doesn't account for market volatility. As we said, investors are what drive the price up and down. If we were to give Bitcoin to one person, the price would be the exact same as the forecasts. But that's not how the real world works. In the real world, we have investors, and investors are people like you and me with feelings and emotions. Based on general sentiment, they can become greedy or fearful. And because most of the Bitcoin investors are young guys who have very little control over their emotions, the price of BTC skyrockets and plunges with every minor correction. And that's why the stock-to-flow model is not perfect. It's a good model, and because it's only good, the forecast that one Bitcoin would reach a price of $100,000 failed spectacularly. The real price was nowhere near that prediction. But we have to remember that 2022 was preceded by the two craziest years of the 21st century. 2020 and 2021 were years where the world suffered from a pandemic, the largest increase in the value of financial assets than any other time in history, and financial stimulus packages. Predicting what the price of a commodity will do in situations like these is difficult at best and impossible at worst. But that's why there are other ways to predict Bitcoin's price. Because the stock-to-flow model doesn't take into account various other factors that influence Bitcoin's price, Plan B came up with 3 other models to track price. They provide a 97% accuracy and are as follows. 1, the time model, 2, the UXO model, and 3, the difficulty model. The time model represents adoption over time. In other words, the more people that adopt Bitcoin, the higher the price. The UXO model calculates the distribution of Bitcoin across unspent transaction outputs, aka UTXO, UXO. If the distribution is wide, the price of Bitcoin is high. The difficulty model tracks the net worth power of the Bitcoin network. That means with every increase in net worth, the price of Bitcoin will also increase. Other models used by investors include the Elliott wave theory, the Fulcrum index, and the greater fool theory. But we will not be discussing those today. Despite all of these, investors still lost a lot of money following this model, and they were furious. The biggest flaw with the model is the fact that it predicts the price of Bitcoin based on a single factor, scarcity. While it proved useful in the past, we start dealing with extremely bizarre numbers if we extend the model past the year 2045. Following the stock-to-flow model, the price of one Bitcoin in 2045 should be worth, and hold your breath, $235 billion. Now imagine how crazy those numbers would get by 2140, when the last Bitcoin is supposed to be mined. On top of that, BTC is decentralized currency, so new investors thought that crypto was completely unaffected by the decisions of the Fed. In October 2022, when it looked like the Fed was going to be raising interest rates, a lot of investors jumped into Bitcoin to hedge themselves from inflation. And at first, they were right. The price of Bitcoin reached $66,000, but then it suffered a 10% drop by the end of the month, closing at $53,300. Unpredictable factors like these prove that Bitcoin is not independent of decisions made by the Federal Reserve, even though it's a decentralized currency. Also, CoinDesk came out and criticized Plan B's model, saying that his definition of scarcity is very different from the real definition of scarcity. According to Plan B, scarcity is the supply growth of Bitcoin measured by the stock-to-flow model. In other words, when new Bitcoins are introduced, the pressure to sell the commodity increases, and this, in turn, drives the price down. However, when you really think about it, in the stock-to-flow model, the new supply is so small it could practically be considered insignificant when compared to the existing supply. So, in short, CoinDesk states that while the stock-to-flow model was useful in the beginning and will probably continue to be useful in the immediate future, it becomes irrelevant when trying to predict the price of Bitcoin 50 years into the future. But Plan B disagrees. According to the two most recent videos uploaded on Plan B's YouTube channel in August, he predicts that Bitcoin will reach unprecedented heights. His rough estimate, according to RSI, claims that Bitcoin will jump to $300,000. RSI stands for Relative Strength Index, and it's a measurement of momentum. Because momentum could be considered a force, it can be calculated. If done correctly, this technical analysis method can tell us when the momentum will switch. The index goes from 0 to 100, and everything above 50 signifies an uptrend, while the graph below 50 announces a downtrend. Calculating RSI is a fairly complicated process, but what it boils down to is calculating the separation between the gains and the losses over a standard period of 14 months. With these two numbers, we get an index that will be somewhere in the range of 0 to 100. If we represent the data on a graph, we will get this image. On the x-axis, we have the past 15 years. The y-axis contains the RSI score for each 12 months in a year. The color of the dots is determined by the number of months until the next halving period. According to Investopedia, halving for Bitcoin miners simply means the time when the new reward for mining Bitcoin transactions is cut in half. The graph obviously represents the 4 bear markets and the 4 bull markets in Bitcoin. For stocks, the range of the RSI is between 30 and 70, but for Bitcoin, this range is from 45 to 90.
For Bitcoin, the RSI is not in the 30 to 70 range. It's in the 40 to 90 range.
This shows us that the market is in a major uptrend and the price of Bitcoin will rise over the years. Of course, looking at the 4 peaks, we can clearly see that there's a downtrend of around 5 RSI points every 5 years. This means that the price will stabilize in the future and the RSI might go in the same range as that of the stock, i.e. the 30 to 70 point range. Paying close attention to the color of the dots, we can see that each bull market high is red, which means it occurs at a time when Bitcoin miners are furthest away from the halving period. Every bear market, on the other hand, is green. This means that a bear market happens as we miners near the halving period. As 2023 draws to a close, the dots are past the halving period, and they will shortly be in the red. And if the past 15 years are an indication, this means that Bitcoin is in for another price increase. And since Bitcoin's price is $36,400 at the time of writing this, when the bull market does come, it's pretty natural to assume that the price will increase. This theory explains the $300,000 future evaluation, which means that Plan B did it again.